Quant's price action is doing something a lot different than what I anticipated. The two price paths back here is what I thought how the price of Quant would move. I was guessing it really wanted to hit 152. I think this was my favorite guess, but in the event it went up, I gave you a price path on how that would take out this high. So we could obviously delete the blue right now. And what we'll do here is, now that we have a little bit more information, I'm going to offer you a few more ways on how price action might move and why this is slightly surprising. I'll tell you why I made this guess and why this is kind of improbable to make this pattern this big. So let's dive into Quant. Oops. I hit the wrong button. I didn't mean to hit that one. Okay. So the reason why I offered this price path back on 2 days ago, I guess, was because a lot of times when you have an aggressive move up, you'll have a nice lower high that is not necessarily based on timing, but it's more based on symmetry of how price got up there. Like a man, right? You see, like humans are symmetric, as are most animals. I think that's an accurate statement. Vertically symmetrical, right? And therefore it doesn't matter the timing, because depending on the chart you are, like the way symmetry works, that's why I guess the higher or the lower high here, because of the timing on how these higher highs went, right? So I guess from a timing standpoint, it would probably work its way up, make its higher low on this time axis. And the way I chose the height of that is just roughly a 45-degree angle from the top, because crypto loves 45-degree angles. That's why you see so many triangles, and just roughly, between 30 to 45-degree angles, right? All the time. That's why I chose that price path as my favorite one. Now, I guess I can delete it because it was clearly off, even though my target of letting you know I think 152 needs to be hit, that'll probably end up being right. But sometimes most of the value in having good technical analysis is how it gets there, right? And I think that's, if you're a new viewer, that's why I think that's how my channel is a lot different than almost any other channel you're going to find. I don't only tell you, I offer different price points, both up and down for a breakout, but I let you know when the pivot points are, when it becomes probable of one of those two. Not only that, then I tell you how it will get there, right? So if you're a new viewer and you're just watching this part, go ahead and hit the subscribe button with all alerts, because I'm going to show you how price moves a little bit more, even though I was definitely off on this one. But I'm usually not, though. And so from a symmetry standpoint, usually you don't have this type of thing happen so long. And not long from a time perspective, long from a symmetric perspective. This is like a elongated, I guess how pattern traders would say it, shoulder. This is weird. All right, so it's a bigger sell-off, more sustained sell-off than I thought. And the reason why, from a psychological standpoint, why that kind of stuff happens, like I proposed, is because after a big move, the first pullback, you still have a lot of buyers who believe that this high, like that wasn't the high, right? So in order to take out this high now, it will have to go sideways for a while. Like, I don't think it's just going to spike up from this point. I don't think that's going to happen. Like, it'll be, I'm only on the 15-minute chart, so it might not be weeks, but it'll be like out here. Let's go to a bigger chart. When would that be? Yeah, end of the first week of November. I guess it could, if it goes sideways long enough, it could take that out, but it'll be end of November before that's even like remotely likely. Okay. All right. You need this box on your chart, just like I told you last time. So now current price. All right. So draw this on your chart because it's going to work. And then also, I would throw on, see this orange line? It's the 1 hour 200 EMA. And I happen to be on the 1 hour chart. If I go to the 5-minute chart, it's still the 1 hour 200 EMA, right? But however, how you do it, you need it on your chart because it's getting price action really nicely. I mean, look at all this. And I think these two tools should be able to guide you pretty darn well. I would throw one more on. I would throw on the weekly 10. Because if you have a breakdown from 152, like Bitcoin accelerates down, Quant could spike down, hit that, then come right back into 152 and use it as support. But I think it would take a strong move on Bitcoin for that to happen, all right? And I think these are the tools that you need. How to interpret this? I wouldn't guess that there's going to be a move up until the 1 hour 200 is used as support. As long as it's so not just above. I chose my words specifically because if I didn't say it that way, then that means at this exact moment where that wick is, you can see it. That means it becomes probable that the move, that the price starts trending up, right? But that's not what I said. Once this is used as support. So as of now, I would guess it has a higher chance in this exact snapshot in time. It's got a better chance of hitting 152 before it hits 181. And your threshold on win probabilities of that flip is either support or not support of this line. That's it. In the event of a strong move down on Bitcoin where it goes like to 17.5 or lower all of a sudden, I would expect price of Quant to come down to the weekly 10 EMA, which is this red line, and then bounce back above 152 and use it as support. But without a strong move on Bitcoin, I don't see that happening because it'll probably find 152 as support. And that's all you need. You literally need this box, this line, and that line to have a freaking awesome understanding of what Quant Price will do next. I mean, just look how freaking exact this stuff is. Look at this orange line. Check it out. This is the 1 minute chart. Look. Sellers brought it down to it. The daily, this is also the daily 10. Little bit of buy action, little bit of buy action. The next, and then it went below, which means the next one should be a lower high, lower to this high, which is what happened. Try to use that as support. Another lower high. The next time you pass below is when you should accelerate. Even though you didn't get a true rejection, so it didn't treat this precisely the same, but as the typical way price moves. But once you take out this low right here, so coming below once, coming below twice, lower high. If you take out the low, that's when you accelerate. Technically it started accelerating when it went below this this orange line for the third time. A little bit different of price action there. Probably because traditional finance algorithms are not controlling this price. So this is mass market psychology interacting with this. Kind of interesting. But it's similar. When it takes out this low, after a nice lower high, then that's when it accelerates. Coming back to it. Yeah, it just kind of hovered around it. Got rejected. All right. Now let's go to current. That's pretty precise stuff. So you can see, like, this is literally a real line that people are making trading decisions based off of. It's real. And it's what a decent amount of the money in this coin is looking at. Or at least when it gets close. So honestly, it looks like it's getting ready to pop up to it now. This shape right here is not bearish. And so let me Let me stop you there. I'm on the 1 minute chart. So a bullish formation on the 1 minute chart might have like a 2-hour shelf life. Doesn't mean back to 180, right? It could just mean back up to the daily 10 or a failure pattern above. This could be the moment where it gets above and tries to use that support. But if it can't do it within a couple hours, then that setup is, the shelf life is done, okay? Yeah, I actually like this formation a lot. But because it's in a position of weakness, Bitcoin's price could bring it down, even though this has been ignoring Bitcoin price. What kind of percentage up would that be? Yeah, that's tradable. It's 4%. Yeah, honestly, it looks poised to make a 4% move up. This is not financial advice. I'm giving you my opinion, and I'm explaining why I hold that opinion. What you do with it is your decision, and I'm not responsible for it, for what happens. Unless you make a hell of a trade, then you can send me some Dash. I'm just kidding. That is a joke. If you break out of this formation, though, it'll probably bounce at one of these two areas right there or right here, make another lower high, potentially, and then come down. So if it does break down, it might give a second attempt here. But if that does happen, it is more likely that it forms a lower high after hitting this. So it'll probably get some bounce, but if it does hit, it'll probably be a lower high, and it'll probably be in line with, something like this. So it could get stuck in this triangle. And then if it does go sideways that whole time, it has a chance to break up. But I would watch out for this triangle. There you go. And if it breaks down below this point, I don't think it'll find support at that point. That is when it's going to hit 152. And I would not take into consideration 181 until, like I said earlier, it's not even likely to happen. Like, it's not even a topic of conversation until this is used as support. And of course, this is already close to here. Why is that valid? Well, that's the line that price is interacting with right now. So it's actually has a, it looks like what might actually happen is it forms a bigger triangle. It could do this because this orange line goes and price wants to hold 165. That's a possibility as well. But regardless, this 165 line for short-term micro time frame, which is what I think the question was, this line is pretty big. This is not going to be big. If it breaks this, it's going to go below there, and it's going to hit 151. And that should give you both upside targets, what would initiate an upside target, downside targets, and what would initiate a downside target, and then what I think in the exact immediate sense. That's quant for you. It's gonna be a little bit more sideways than what you've been accustomed to. So perhaps the most important thing I can say about quant is, if you're somebody who is betting on or has the expectation of it to continue to do what it was doing, use this line. Don't even think about it until the 1 hour 200 or the daily 10, same thing, has been used as support. Like, discipline yourself. Don't even think about it until that happens, please. That might be the most valuable thing I could say to people who like quant, because it's easy to get sucked into biased expectations, and that makes you trade the wrong way. So that is when you can start thinking about that stuff, and there you go.